See you both there. Julie, if we could start with you. Market obviously hitting the fresh sort of 5-year highs, hit that magic 5,400 point mark, then a big turnaround there. Do you agree with John that perhaps, you know, we just got to that point and the market's just paused for breath and gone, hang on, let's have a look at what's going on here?
Certainly all eyes were on China and that risk-off environment really coming from that area there. If we have a look at the morning, we saw an extremely positive start to the market, and that was due to the US market performance, the non-farm payroll numbers coming in slightly below expectations, and the market really pricing in quantitative easing at $85 billion a month, at least until March next year. Now later in the afternoon, we did see things turning. The Shanghai Composite down by 1.2%. If we have a look at what's leading the declines there, it's small caps as well as information technology and telecom stocks. The US futures also down by 0.3%. One of the things that we've been watching very closely are the money markets over in China, and we've actually seen the money markets surging by the most since July this year. We've seen the 7-day repo rate rising by 42 basis points to 4%. So the central bank over there once again refraining from adding funding to the system. So it does look like that's leading to some nerves. And of course here domestically we've been watching the inflation numbers as well as AGM season, with AGMs from the likes of AGL Energy, Origin Energy, Mortgage Choice, Treasury Wines, just to name a few. But really in the afternoon the focus was on China, the Shanghai Composite declining and the massive surge that we've seen in money markets.
Inflation data. Julia, let's get your thoughts on that too, because it was interesting, wasn't it, to see the impact that it had earlier on, stronger than expected numbers there, and the Aussie rose. There was a lot of talk of, you know, moving up to 99 cents, to parity even. What about stocks, you know, the initial impact on stocks that we saw? I mean, was it that marked, this sense that perhaps the RBA is on hold now?
Well, we saw a huge impact in terms of the Aussie dollar when the inflation numbers initially came out, hotter than expected at 1.2%, the market expecting 0.8%. But of course, as the market worries around China started to creep in, we saw the Aussie dollar falling quite substantially. But the increasing Aussie dollar has been a negative in terms of stocks today. And that's stocks like CSL, ResMed, as well as Ansell in the healthcare space. And these are all companies that make US dollar revenue and US dollar earnings. We saw CSL down by 1.8%. We saw ResMed down by 0.5% and Ansell down by 0.9%. Outside of the healthcare space, we know that QBE Insurance has a large exposure to the US as well. That stock down by 2.4%. James Hardie managed to decrease of 3% today, and we also saw Brambles down by 1%. It's not only some of these industrial and material companies which are impacted, but also if we have a look at stocks like Orica, for every 1 cent move that we see in terms of the Aussie dollar, has a $3 million impact in terms of profitability. And of course stocks like Woodside Petroleum, which sells in US dollar terms and then needs to convert back into Aussie dollar to announce its profit numbers and of course pay its dividends. So altogether we've seen a pretty big impact in terms of those stocks which are exposed to the currency moves. And with the volatility in the Aussie dollar, it's been a bit of a strange one today, but in the end it's been a negative for those stocks.
I wanted to turn to some of the corporate news too about today and focus on, of course, the continuing AGMs that we've been seeing. Now the energy companies, energy retailers in focus today, AGL and Origin, warning about the impact of that warm winter on profits.
We are right in the middle of AGM season, and actually we've seen the annual general meetings having a big impact on stocks. We have a look at some of the big movers in the past week. It is on the back of commentary coming out of the annual general meetings. Qantas is down 13%. We've seen Macmillan Shakespeare up by 13% and Bradken gaining 10% in the last week. So this AGM season is very important to get a sense of how the year's progressing and also getting an idea of forecasts, because a lot of these companies didn't give their full year forecasts in the past full year results and reporting season. So if we have a look at AGL Energy and Origin, both companies coming out to warn about the warmer weather and the impact it have on first quarter earnings, but very different share price reactions. We saw AGL Energy down by 1.8%, whereas Origin was actually up by 1.5%. We're also watching Telstra, and it does look like instead of a 4-pillar policy, it's got a 3-pillar policy now, where it is focusing in on improving customer advocacy. It's also looking at trying to derive value from its core, and the third one, and I think the most important one, is to build some new growth businesses. So some big AGMs going on and also some big impacts in terms of share prices.